Okay, big news. So the US and China just hit pause on their trade war. Now, the twist is that could mean higher mortgage rates. So let's talk about what it means if you're looking at homes right now. Over the weekend, leaders from the US and China met in Geneva, Switzerland, and they came up with this short-term deal that is going to cool things off for now. So here's what they agreed to. This trade deal is going to start on May 14th. It's going to last 90 days. The US is going to cut their tariffs from 145% all the way down to 30%, and China is going to cut their tariffs from 125 down to 10. So yes, they are making it easier to trade with one another again, but at the end of the day, these tariffs are still so much higher than they used to be, and unless you're in a sector that has massive profit margins, this is still a really big deal. So this trade deal has been awesome for the stock market because investors love it when trade tensions ease, but here is the catch. When stocks get more attractive, less people buy bonds, and then those bonds have to pay a higher yield, and that causes mortgage rates to go up. So while this deal helps with trade and it has boosted the economy, it puts massive pressure on mortgage rates. The other key part to mortgage rates is tariffs in general are inflationary. A lot of people are saying, hey, look, these tariffs are a one-time price adjustment. It's not going to be like 2021 where we see ongoing inflation. But other people are saying we're going to have the same supply chain problems. It's going to cause more lasting inflation, which would also increase mortgage rates. I want to know, what do you think about this trade deal? Do you think that this is just a short-term band-aid and we're going to have another crisis in 90 days? Or do you think this is going to lead to a more lasting trade agreement? If you're house hunting right now, here are today's average mortgage rates. Remember, these numbers are just a ballpark. Give your lender a call and see what your rate would be.